So today I'm going to make a video on Boohoo, and I'm going to say exactly what I'm seeing out there, and all I have for Boohoo this morning is negatives. They have not been, I believe, truly honest to shareholders this morning. I feel like their actions to resolving how poor performance the company has been in the last 2 years have not changed. I feel like the company keeps trying to do the same things and expect different results. And I believe that management team are not capable of turning this business around. And actually later in the video, I'll actually be asking or requesting that the management team change their CEO, because the job that I believe the CEO has done in this business is inadequate. So I'll get on to Boohoo in a little bit. If it wasn't for Boohoo, I would have probably done a video on these subjects. So for the next kind of 2 or 3 minutes, I'm going to just talk about a few other things, and then I'll get on to Boohoo in a little bit more detail in a few minutes. So just starting off with Greggs brought out their results. I thought the results were actually pretty good, and the stock is actually down 3% today. So this is what I actually asked for. I said if Greggs can bring out solid results and then the share price has a little bit of a wobble, that'd be great. I would like Greggs to go a little bit lower so I can buy some more shares in Greggs. But yeah, overall it's the perfect scenario where results seem decent and the market is sending it down a little bit. So I'm absolutely fine with that. It's funny that Greggs is bringing out these results and the stock is down 2%, nearly 3% today, and yet Boohoo bring out terrible results and the stock's down. Well, it was only down 7%, it's jumped down to 9% now, but it shows you. But obviously Boohoo is definitely priced a little bit more negative than Greggs. The next thing was the S&P 500. S&P 500 actually opened up green. It looked really good in pre-market, and then it gave it all back. A little bit of a recovery towards the back end of the trading day, but I thought today, was going to be a pretty decent, or yesterday was going to be a decent day with the Congress avoiding the shutdown. I thought, okay, that might give the S&P a little bit of a boost, and it did in pre-market, and it gave it all away, which kind of shows you how much fear is building out there. Once again, the sentiment is into extreme fear once again, which kind of sums up where we are at. Tesla, I'm surprised, was green. Tesla was actually up 0.5%, and yesterday they brought out their delivery numbers, and their delivery numbers were a massive miss. They came in with deliveries of 435, and actually the Wall Street was expecting 461. So this is a big miss, nearly a 5% miss. And when you see a company miss and it's trading at a premium, which Tesla is at 71 times earnings, normally if you have like a 5% miss like that, your stock would get punished. But yet Tesla was actually up on the day on these numbers. I thought that's absolutely crazy. Obviously the big thing when we get to Tesla's earnings is what have they been selling these cars at? Obviously if gross margins get hit and then profitability gets hit, that could be another whammy for Tesla. But I thought just on these numbers alone, we would see Tesla get punished on the share price. If any other company came in and missed by 5% on profitability, revenue, you would see some pain in the stock price, and it didn't happen with Tesla, which was absolutely crazy. And the last one I just wanted to really quickly point out is Target. Target keeps dropping. I mean, there's a lot of actual retailers out there on the US side that are priced in a recession now. Whether you look at the likes of Dollar Tree, for example, a lot of US retailers are priced in a recession now, and Target is exactly the same. From the highs of February 2023, which is only the start of this year, this was a $176 stock. We're talking about Target here. We're not talking about some high-risk growth company here. We're talking about Target. And Target since then is down 41% since that time frame. And now you're collecting a 4% dividend yield with this company, which is one of the highest it's been for a long time. And it's now down at 14 times earnings. I mean, at what point do you start considering Target? I think I've got to start taking a bit of a look into Target right now, because it does start to look a bit interesting to me. But let's get on to Boohoo, because that's probably the reason why most of you have clicked on this video. So I look at Boohoo, and their performance this morning was poor, and I thought it was going to be poor. I said to you on the video that I did yesterday on the earnings prediction, if you are a company that's doing really well, what you normally do is you bring out trading updates going, oh, look at how well we're doing, or even if you aren't doing well, but you're starting to turn it around, you start going, oh, look at our improvement here. They start putting out trading updates. Boohoo haven't done that. They haven't talked to the investors since May time. This is the first update we've had from Boohoo since May time. And what we've seen is there's been zero progress made since May time. And what it's clear is happening at Boohoo is they're trying to do exactly the same things, but expecting different results. And it's not happening. The results are still poor. And what's more crazy is for me, I was so frustrated with their earnings today that they're still doing exactly the same things, and they're trying to play them up as being very good, but they're not. And I didn't even listen to their press conference, their webcast today. I thought I'm not even going to listen to the webcast, because what they're going to do is they're going to say exactly the same things they said a year ago, and yet no progress is being made. So I'm not even going to listen to it, which shows you where I'm at if I'm in that sort of position. And then I go on to Twitter or X, and I see Cockney Rebel, who is a UK investor, posting the most frustrating thing that I've seen, which is exactly how I feel, which is the CFO is then talking up the results like they're good, and they're poor. The Boohoo should be nowhere near these results, and then they end up talking up the thing. If they start thinking these are acceptable, it makes me so frustrated. And if we actually have a look at the results, let's go back onto what we were expecting. So if you look here, revenue are expected to be between flat and decline of 5% for the prior year. So we're expecting to see a improvement as the year goes on. If you look at their outlook in their recent results, there was no mention of improved trading. No mention, which once again gets me questioning, can they hit the results they said they were going to do? No. And in fact, if you look here, they are now expecting their decline in sales to be between 12 to 17%. Now, if you actually look at what they were saying, they were actually expecting 5%. So this is a major downgrade in the guidance. This is a major downgrade. I cannot believe, even though the shares are so low, the stock isn't down more because of that. Because once again, they say, this is what I hate companies doing. I hate companies coming out and saying, these are the results, they're really bad, but don't worry, because in 6 months' time, in a year's time, they're going to get a lot better. And then it gets to that time frame and it doesn't happen. And Boohoo have done this constantly. They've constantly said, yeah, things are going to get better, and then they go, actually they're not, but they'll get better in another 6 months' time, and it doesn't. And this is what I mean, Boohoo keep doing the same things and let their shareholders down. Now, the next thing is they did say they expect adjusted EBITDA margins to be between 4% to 4.5%, which we have seen an improvement in the adjusted EBITDA margin. But the problem is the revenue is declining so much right now that they're not going to be able to drag down to profitability as much as what they should do. And at the end of the day, revenue needs to improve. It cannot keep coming down as it is doing at the moment, because that's going to have an impact on the business longer term. And the next thing they started doing is they tried covering up the cracks to shareholders. I don't like companies that are not honest to the shareholders, and Boohoo is exactly that right now. They are not being honest with the shareholders, which pissed me off the most. If you look here, they're expected to decline 10% to 15% in the revenue. Now, if you look at this, and I knew it was going to be a bad report already when I looked at the waffle they started putting on straight on the trading update, I thought, this is not going to be a good update. And it wasn't. Now, this is what I hate the most, is that they said they're going to decline by 10 to 15%. And it said here that revenues in core brands declined 10%, consistent with prior guidance for group revenues to decline 10 to 15%. So they're like, hey, look at us. We said we're going to decline 10 to 15%. Look at our core brands. They were at the higher end of our guidance. That is unbelievable that they've done that. I really am frustrated they tried to make it sound outwardly positive when their actual revenue wasn't at that sort of rate. If you actually look at the revenue was actually down 17%. 17%. That's their actual revenue. So they said they're going to be 10 to 15%. They then tried to make it out like, look, we're at our higher end of the guidance because our core brands was only down 10%. When realistically their revenue was down 70%. That's what they were guiding for. Don't cover it up and say it's going to be something else. I'd try and make it out look better than what it is. What you said you were going to do didn't happen, and be honest with it. Don't cover it up. And that's what pissed me off the most, is that they're trying to now cover up the cracks to the shareholders. And Boohoo should not be declining this much in revenue. They shouldn't be. The reason why they're trying to blame it on many other things. The reason why is because they're not good enough. That's the reason why they're declining. If you look at Shein's revenue in the last couple of years, take out the CV comps, you've gone 15 billion, 30 billion, and I think, in fact, now in 2025, they're targeting 58 billion. Their revenue is doubling and doubling and doubling. Shein, even with their tough CV comps, are growing rapidly. And this is what Boohoo should be doing. But Boohoo aren't doing it. Why are Boohoo not doing what Shein are doing? Or even not the crazy growth that Shein has been doing. They should at least be growing. And they aren't. What is the reasons for that? Well, there's multiple reasons why Shein have been able to dominate Boohoo and why Boohoo aren't performing good enough right now. First thing is to go down to the stylists. Whoever are currently styling the clothes for Boohoo are not doing a good job. They are not attractive to the people that they're targeting. So there has to be a change up in the stylists. They are not making either enough lines than what they should be doing, or they are not making enough good products than what they should be doing. And this is clear when you look at the audience they're targeting. If you are going to Google or go on YouTube and you search Boohoo haul, which a lot of people will do, whether it's on YouTube or TikTok, look at the views that Boohoo hauls are getting. They're getting 1.2, under 1k, 4.9k, 13k, 3.9k views. So the views here are relatively low. So they are not either making good enough clothes, or they are not working with the right influencers they should be working with. So there's two problems already there in the company. You go on Shein, you start YouTubing Shein, look at the views they're getting. The first one here, 104k views, 4.8k views, 36,000 views, 24k views, 71k views. You're talking 10x the views that the Boohoo ones were just getting that we just searched on YouTube there. There's the first problem. Whoever the stylists are in Boohoo, they're not doing a good job. And the content and influencers they're working with, they're not working with the right ones. Because you can see Shein are absolutely smashing it here from a social media point of view. The next thing is how cheap they are. Shein's clothes are far cheaper than Boohoo's. So from a attractive, the style is better. How cheap it is a lot cheaper with Shein. They're outsourcing most of their work to China. Boohoo currently still produce most of their clothes in the UK, in Leicester. And we've seen the pressure they've had. It's a different subject, but I still can't believe how much the media focuses on the Leicester situation, and yet are fine with the outsourcing to China. I think that's absolutely bonkers. But why are Boohoo then trying to get up their standards and take all this heat by working in the UK, using like factories that are in Leicester? Don't do it. Go outsource to China. Go outsource to China, get your costs down, make your product cheaper, be able to compete with Shein. So the next thing they need to do is start outsourcing. They can't keep paying these expensive wages that they do in the UK. That's another benefit that Shein have on them. And that's what I'm going to say. And I don't like doing this because obviously this is a person. They are employed. This is their job. But Boohoo appointed John Little in 2019. So they poached him in September 2018, but he didn't come into the job in 2019. Comes into the job in 2019, has a year. The company can do, even in a new CEO, there's not much change in a year you can do. You start getting into 2020, the CV boom helps them. 2021, the CV boom helps them. So that was an easy year as a CEO. 2022 and 2023 have been the first 2 years he's actually probably been a proper CEO, and it's come down to his decisions. And his decisions in the last 2 years are not good enough because the company is making no progress. In fact, it's going backwards. So for me, there needs to be management change. They need to get a new CEO. They need to get rid of John Little. He needs to get pushed. He's not doing a good enough job. And as you see, the styles aren't clearly good enough. You look at the outsourcing, they're making the wrong decisions with outsourcing. And technology. Their technology is far behind what Shein is. At the end of the day, it might be a clothing company, but it's a tech company. You're online, you're doing e-commerce. And Shein's tech is far ahead of what Boohoo's is. They're able to produce many lines. They're able to see which lines are doing very well. They slow down and sell off the lines that aren't doing well. They increase the production on the lines that are doing well. The tech that's in the Shein platform is far ahead of Boohoo's. So Boohoo have sat still and not improved the tech, and Shein have, and that's why they're also doing very well. There's 3 factors why they're doing so well, and Boohoo aren't. The tech in Boohoo has not been changed since the last 10 years. And whose fault is that? That goes down to the CEO. But can I blame him? Can I blame John Little for being poor at managing an e-commerce place or a technology company? Can I blame him for that? Not really, because if you look where he has come from, he has come from Primark. Primark is a brick and mortar store. So when you hire someone from a brick and mortar store and then stick them onto an online e-commerce, total different businesses. You are entering a tech business. You need to have someone that's tech-based for a tech business. And that's where Boohoo have gone wrong with the appointment they made 4 years ago. They need to get someone that is able to work on the tech side as well as the clothing side of the business. And John Little isn't that person. He worked at Primark. He could be very good for a brick and mortar company, but he's the wrong appointment for Boohoo, and it's shown. He's not been able to develop the company fast enough to deal with or compete with the likes of Shein, and he needs to go. He's shown in the last 2 years he's not been able to run this business properly. Now, like I said, it comes down to Boohoo, and they can't keep doing the same things. So there's two ways Boohoo go about this right now. The first one is they get rid of John Little. They get someone in who is more tech-based. They start ramping up and outsourcing the business or the production to cheaper locations, and they actually focus on the tech, and they improve the tech and the styles and the production to more of what Shein's model is. The other option they do is they go, all right, we're not getting rid of John Little. We can't compete with Shein. We can't outsource our clothing. We can't compete with Shein. You hold your hands up and go, we can't compete with them. We can't keep doing this and expect us to catch up to Shein, because it can't happen. The other way you do this is you go, right, what we're actually going to do, and I know a few people won't like this, but you go to a brick and mortar store and you open a Boohoo brick and mortar store. You have all your brands in that store. You have a little section that is Debenhams. You have another little section that is Pretty Little Thing. You have one that's Nasty Girl. You have another one that's Boohoo Man. You open up, you use your brands in a brick and mortar store. And then at least through a brick and mortar store, because you're not getting traffic to your website, people are not coming to your website right now. You at least use those brands, and people walking past on the high street and go, actually, you know what? I probably won't go on the website to order from them. I would go on Shein. But if there's a brick and mortar store, I'll go in there. I'll go have a look. And you compete with the likes of Primark. You do a Primark, but you do a Boohoo version. Primark's doing very well. You open up there, the margins might be a little bit lower, but you'll get a lot more traffic into your business. You'll see your active customers go up. And you open up a pilot store. You open a pilot store in London, Birmingham and Manchester. You open up in 3 cities and you see if that works. And at least you're trying something new here. At least you're trying to get traffic in. At least people that walk in the high street will go into the Boohoo store and start buying up clothing, and it might help them improve. And if you've got someone that has been at Primark for many years, that's the best bet for them to do. They are a brick and mortar person. Get them in their element. Get a brick and mortar store going. Get 3 stores going and see how they do. But they can't keep doing what they're doing. They can't keep doing exactly the same things and expect different results, because it's not going to make a difference. Shein have dominated the online. They have dominated Boohoo. They have squashed them. Boohoo even now pivot to a style and try catch up to Shein rather than cost cutting. Or they move to an online store. They still have the online store, but they also have a brick and mortar store where they can at least get traffic in. And then they go to, can they do a Boohoo, can they do a Primark style model with Boohoo? Because we've seen that does work. We've seen Primark is a very successful company. Can Boohoo do something like that, where they're able to charge that a little bit more because it's a brick and mortar store? But the only kind of really, Primark's the only really kind of fast fashion style company on the high street, and can they do that? That's what they got to do. That's what they got to do. There's got to be a change in Boohoo. You've got to. Boohoo right now are not doing good enough, and the fact that they think they're doing okay and accept that isn't good enough. They need to pivot in a direction. They need to pivot in a direction where either they try catch up with Shein, or they move and change the business to a Primark style model. But they can't keep doing what they're doing, because all they're going to keep doing. If they keep doing what they're doing right now, they're just going to lose to Shein. They're going to have revenue that declines. They're going to have margins that are under pressure. They're going to not be able to ramp up profitability. And that's also not going to help that revenue is declining. The active customers are down. People are not going online right now to Boohoo. They're going online to Shein. They need to make an improvement. They need to make a change in the business model. And right now, it's not clear. And for me, this is exactly why, for me, I am frustrated. I think that I am more likely looking at selling my shares. If they don't improve, if they don't give a clear plan in 6 months, I'm going to be selling my shares. They can't just keep disappointing shareholders. And the fact that I'm here right now making this video and I'm offering you improvements, or better improvements than what this company is doing in the last few years, is shocking. I should not be able to be sat in this office with a camera and be able to offer a clear path and a better turnaround play than what management doing and have done in the last 2 years. It's not good enough. So they've got big issues. They're in a mess. And if they keep doing the same things, it's not going to be good. It's not going to be a good ending for Boohoo. I know sometimes management from Boohoo do see these videos, and hopefully they take this on board and they do look at improvements. But right now, that was a bad update. That was a bad update today, and they need to improve massively. So thanks for watching, guys. If you could hit the like button if you're on here, subscribe, and I'll see you in a bit.